Miami faculty, and to the entire Miami faculty for having me come give a talk on this relatively new paper. So to give you some brief context on where I'm coming from here, there's always been, especially lately, a lot of talk about companies having multiple stakeholders. And so this got me really thinking back to some of the work I did prior to graduate school as an auditor at a large accounting firm, where almost my entire time there I spent running audits that weren't at all meant for the investors of the client, but more meant for the customers. So just to give you an example of my own experience, my client was at one point a credit card company, and we were performing an audit completely outside the financial audit that was meant almost strictly for the company's customers. So like if you ran your credit card processes through a certain through their systems, you would get this audit. And so this got me looking to the literature for this type of stuff. And to be honest, I didn't find much of it. And so I was looking for sort of research on what we know about what I would call non-financial audits. The set of audits that aren't strictly in the scope of a financial statement audit or SOX for internal control testing type of audit. We didn't have much. And so I knew this particular setting existed and I wanted to research it. And so there we have this paper. So as I said before, the paper is motivated and sort of is placed in the literature by this view that companies have multiple stakeholders. You can think of some customers, employees, investors. Each of these particular stakeholders are going to interact with a different part of the company's or different part of a company, and they each may want various assurances on that company's operations. And so you can think about a financial statement audit being useful for people like investors, but the company has many other stakeholders, and they may benefit from various other types of audits of the companies. And so despite this sort of importance, at least on a conceptual level, we don't know much about this particular setting or these particular types of audits. And so this paper is an attempt to explore that setting. And as I'll point out, one of the key challenges, perhaps why the setting hasn't been looked at so extensively, perhaps, is that it's really hard to get some of the data on these audits. They're not mandated by law. They're not mandated to be made public. Only a subset of companies are going to get these, and so on. So to give you an overview of what I'm about to show you and sort of the main findings, and I'm going to give you more context on the audit setting here in a minute with sort of the what kind of guidance these audits or these particular audits are going to follow. One of the main takeaways is that I find a lot of evidence that shows that these large audit firms, all the big four, the Ernst & Young, PwC, are commonly hired to perform what I'll call customer relevant audits that really isolate internal controls that are customer facing. And I think the example I gave with the credit card company was one, but also if you look at a lot of the cloud computing companies, they are now getting these audits too. So these audits are completely distinct from a financial audit, and they're performed in accordance with with a framework set by a large accounting regulator, effectively. And so these are audits that are being performed. In fact, they must be performed by accountants. And I'll talk about how accountants can acquire that kind of expertise. These audits are meant mainly for a company's what I'll call customer market, or their sort of existing customers, potential customers. And this is in contrast to their, you could call it an investor market. And so whereas, like an investor would want to see a financial audit, the analogy here, I guess, is that a customer is going to want these audits before really trusting a company to, for example, take my data. And so that, this happens in things like hospitals, cloud computing firms, and so on. So I start by characterizing the scope of the audits. And I do this because we literally know nothing about, or I should say very little about these types of audits. And so a unique part of the data that I'm able to collect, we're used to sort of a financial audit where all you get is the audit opinion. in this particular setting, you get an audit opinion, but you also get a worksheet that has the entire sort of a summary of all the audit work performed. So you get really really interesting information on which controls were tested, what the outcome of those controls or those control tests were, and so you can really look under the hood of these audits to get a sense for what's going on in these audits and how these audits compare to a financial audit. And so that's the initial part of the study. And then the latter part of the study, I guess, in two pieces, is that I follow prior literature a little bit here, constructing a model for which companies actually use these audits. So I construct an empirical model that looks at a broad swath of firms, some of whom have these audits and some of whom do not get these audits. And I try to model the determinants, you could say, of basically showing when these audits are prevalent, when they're not. And the advantage here is you have a unique setting in which you can test many ideas from prior literature on what the role of an audit is for a company, what kind of market frictions drive these audits, what's their supply and demand function look like. And for a financial audit, at least for public companies, this is almost impossible. So a lot of the research on that particular type of question has been looked at in a private company setting, but here we have the advantage of having an audit that we can look at in a public company setting. And the last part of the study looks at how these audits are related to audit fees. So there's a lot of questions about these audits. I think, to what extent do they complement or substitute for the for a company's other audits over their financial statements? And a lot of these questions can be addressed by looking at how these audits relate to a variety of different types of audit fees. And so what I find is that there's a large incremental fee associated with these types of audits. And when you compare the actual magnitude of these costs, they're quite large when compared to the costs of many other what I'll call corporate accounting services like tax services and so on. And so this helps us, I think, on a couple of fronts. One, a lot of research looks at sort of the observed patterns in audit fees and what drives them and what creates them. And this sheds insight on that question. But on the other hand, it also just gives us more context into the broader market for accounting services and audit services. And to be honest with you, I think this is going to become a big, or maybe like an increasingly large part of the audit market as many of these audits pertain to controls over technology, which is becoming a larger part of the economy. These cloud computing firms are growing massively. A lot of companies are beginning to outsource, or they already have outsourced a lot of their internal business functions to, for example, if you look at Amazon and so on, if you look at Microsoft. And so I think this is the demand for assurance in this area is I think only going to increase. Again, if I had two sort of higher level takeaways, it would be that what we observe in the financial audit setting is really only a subset of the broader market for audits. And these large audit firms, all the ones we know by name, are currently demonstrating a lot of expertise in settings that go past just a financial reporting setting. And I'll talk about that more in a minute. And so I think this is a particularly important question to address or setting to analyze, in that technology service companies are becoming a huge part of the economy. I think in a recent survey that was performed over large companies, almost 98% said they use at least some kind of a data service, whether it be an Amazon cloud or Microsoft cloud. I mean, so these types of technologies are really infiltrating many companies. And as I mentioned before, the kind of audits I look at in this particular setting completely supplement the financial audit. And more importantly, they're not mandated by explicit legislation. And so I'm going to look at some of the demand that may be driving that and the reasons that may be happening. And you've also seen some reports come out of the SEC recently where they've expressed concern that many of the banks are using cloud computing to transfer really sensitive information. And the SEC has started to acknowledge that this is a huge business risk And they've said, look, they basically expressed concern. I think it was called a risk alert, where they said, look to the large. It was kind of geared at the large investment banks, but they said, just really be careful when you're going to do these, or if you're going to transfer data over a cloud computing firm, because there's a lot of room for problems there. And as I'll get to more in a minute, there's a section in Krebs's textbook where he talks about that financial audits may not meet the needs of all stakeholders. And so this idea that you have audits occurring outside the financial setting, it kind of emphasizes that idea, and it shows how that plays out in practice. So just a quick little background here. So the particular audits I'm studying are called service organization control audits. Okay, these are, I'll call them SOC from now on. This is an audit framework that was created by the AICPA. Service organization, all that means is basically a company that provides a service to its customers. It could be a bank, a cloud computing firm, hospitals. It happens that in my setting, a lot of these types of audits occur when that service has a technology component. So you can think of a bank. They're going to run a proprietary trading algorithm for their hedge fund clients. Cloud computing companies are going to house a lot of data for their clients. Hospitals are going to store a lot of sensitive information about their particular clients. And in terms of the actual guidance, it uses the term user entities. But user entities, all those are just the actual customers of these types of service companies. So, like in the words of the actual guidance, the point of these audits is to provide assurance that these companies are actually providing a trustworthy, sort of high integrity service to the market, and one of the ways we can provide assurance on that is through an independent audit report. So I gave some examples already. One well known is a lot of firms use a company called ADP to process their payroll, right? But the truth is, if you look at ADP, inside ADP, they have a lot of services that they don't use themselves. And so they're not within the scope of a financial audit for them, but they are within the scope of a financial audit for their customers. And so if you're a company and you process all your payroll using ADP, you're going to want, and if you're ADP, you're going to recognize that these customers want kind of a unique audit to a particular service you're offering them, because what you're doing for them is sensitive to their own financial reporting. And so this sort of tension is going to drive the demand for these types of reports. And so, if you're a manager at ADP, you're not dumb. Like, you're going to recognize this, and you're going to go get these audits. And this is where you see these kind of audits happening. In terms of the timing, so this is going to go back to how I chose to collect my sample. The most recent and current SOC or SOC audit framework was implemented in 2017. All right, at that point, they refined many of the criteria in terms of the guidance, and they actually said, they gave more and different guidance. And so I didn't want to collect, it's a challenge to collect the data. And so I didn't want to collect any data prior to 2017. So I chose to collect my sample right in the middle of 2019. And so I looked at which companies had these audits in 2018. And so full disclosure, I only have a cross section of data in 1 year, but it's a very deep set of data. It's 500 companies in S&P in a large index. We have a huge cross section, and so it gives us some idea as to where these audits are prevalent. And just for some context, when I was working on these audits, it was prior to this particular type of framework. It was under a framework called SAS 70. SAS 70 sort of was a similar type of structure, but as my paper discusses, there were some problems with it, and that they were recognized and addressed. So I guess conceptually, it is possible to go back and look for these audits in prior years, but you're going to run into a lot of trouble because there wasn't really a set framework, and you got to contact the companies to really find out if they have these audits, because a lot of them are not made public on the company's website. All right, so there are 3 types of audits in this setting that I'm going to touch on just right now. I'm going to sort of abstract from the particular type of audit as I do the empirical analyses, and I'll explain why. There's a SOC 1, a SOC 2, and SOC 3. So you can read here kind of the main differences. So SOC 1 is you're going to get a SOC 1 report that's going to look at your own controls that are just relevant to your customers' financial reporting. SOC 2 are a little broader. You may just want an audit report on things that maybe aren't so relevant to your customers' reporting, but you may want to do things to attract customers or to show that you've really demonstrated a level of commitment in your own security. So this can be looked at from a sort of a competitive lens, right? You have a SOC 2, but your customer does not have a SOC 2. And so you can sort of use this as you could say a marketing tool to sort of attract new customers and say, look, we got a SOC 2 audit report. And then SOC 3 is going to summarize SOC 2. So as I mentioned before, SOC 2 reports are actually quite sensitive because they give you a lot of detail inside the hood of the company that is being audited. You get a list of all of their internal controls and the tests performed by the auditor and the outcome of those controls. So those are usually kept within house, and then you can make a SOC 3 public with a little less concern about trying to reveal competitive advantage information. All right, so I think the obvious question that I want to get out of here is say, look, I think we're all going to wonder, well, how does Ernst & Young and Deloitte and PwC acquire the necessary technology expertise? And the truth is that many of the audit firms are becoming to look a lot more like technology firms in a couple of ways. One, they have their own in-house training programs where they educate their staff. So if you look at, it was in the Wall Street Journal last week, the company Ernst & Young now has an in-house technology MBA that it offers to its staff, and it's competing with us. I mean, they're competing with their own employees, and instead of leaving the firm, can now get an in-house tech MBA. It's associated with, I think, an online university, forget the name of it, and they have similar things happening at Deloitte and PwC, where you have a cloud institute where they're training their staff on how to use and run audits over cloud computing firms. If you look at sort of the hiring patterns of large accounting firms, they're hiring a lot more technology employees. But I also want to caveat with saying that we should not be thinking of auditors here as being technology superior to management. Their expertise is still in evaluating controls. Just in the financial statement setting, management is the true expert on their own technology and their own customer service offerings, and it's their job to impose good controls over it. So there's still not, I don't want you to view an audit firm as being the sort of all-knowing expert here. No, they're still trained in evaluating controls. Management's job is to put in place strong controls and make assertions about them, and then it's the job of the auditor to go in and test those assertions. Okay, so theory and a quick example. So if we look at the financial audit setting, these are usually based on a predetermined set of procedures, provide only a core signal of a qualified or unqualified opinion. Krebs argues that, look, this is because when you certify to a course opinion, there's no question of whether or not you perform sort of like a random set of idiosyncratic procedures. You perform the same set of procedures at all of your clients. It allows auditors to maintain their reputation and independence in sort of this repeated game setting that is auditing. And so you have sort of a new framework that has sprouted out in this setting too, to sort of do the same thing. But the result is that you may, a financial audit may simply be too coarse for the entire set, for a firm with multiple stakeholders. And so this creates a demand, but potentially for what I'll call supplemental audits or non-financial audits of other parts of a firm. If you look at Amazon Web Services, they're a great example of this. They have a huge competitive advantage in storing and processing different types of data. They compete with Microsoft and Alphabet, and they're huge. I mean, they generated half of Amazon's total operating income in 2018. So if you look into Amazon, sort of their user agreements in their website, they make all types of assertions that we have really good controls over our systems. But the truth is that in a world with agency conflicts, customers may not be able to verify or completely understand Amazon's assertions or trust them. And so what Amazon does is they hire Ernst & Young to produce a separate audit report that are performed in accordance with the AICPA sort of structure. And it says, here, we've run an audit over all these particular types of systems. And I'll show you that example in a minute. I actually have the audit report embedded in here. Um, and I have three main research objectives. And just to reiterate, I'm coming from a point where we know nothing on the there's almost no research or no large scale research on these types of audits in public companies. And so I thought it would be useful to sort of keep the analysis kind of simple here. And so to test what are the scope of these audits, right? And so how does the scope compare to a financial audits? And so based on some considerations in the paper, we make a prediction, and I realize this is sort of an unconventional prediction in the up top here, but I'm trying to evaluate this question in a descriptive manner. And then hypothesis 2, I look at basically where these audits are more prevalent, and I predict that they're going to be prevalent in technology companies that are running a lot of these services, or that companies like hospitals that use lots of electronic systems. And the last hypothesis is looks at how these audit fees are related to the cost of the audits and that kind of question. And that helps us try to address the question of, well, if these audits are just purely replicating work that we've already performed under a financial audit, then we shouldn't see a strong association between these audits and the fee environment. And so that'll get at that kind of question. So that's what I'm doing in the paper. 3 sort of steps. I think you'll find them interesting, especially if we get into H1. H1 is sort of, you can see almost right into the hood of the audits what's going on there. I promised you an excerpt from an audit. So this is straight from, if you look at Amazon's SOC audit report. So this represents, I just took the top quarter of page 1. And so if you look at Amazon, they have a cloud computing arm called Amazon Web Services. And the company Ernst & Young sort of ran an audit on almost all of their particular product offerings. And so if you use Amazon Web Services, which I do sometimes, you'll know a lot of these particular product offerings. So these are different, these perform unique sort of functions for the customers, right? In terms of processing data, storing data, and so forth. And so it looks a lot like what you would see in a financial audit. And then at the end of the day, Ernst & Young expresses an opinion on the controls that they tested for Amazon Web Services. And again, let me say what these aren't. These are not a guarantee that that the client, in this case Amazon, is not going to have a data breach. They're not a guarantee that there's not going to be any problems, right? It's just like a financial audit, and then that's an opinion. It's just an opinion. It's meant to provide not a guarantee, but assurance. And so keep that in mind as we go through these, in that, there are no promises made here, I guess I should say. So to the data, as I mentioned before, we've looked a lot at the financial audits, which I think is due to their both importance, but also due to the fact that they're relatively easily visible or really easy to observe. These audit reports are not such. And so basically, in order to get them, I needed to go peruse these companies' websites and call their investor relations department. And so I really had to cut, and so I'm trying to manage the workload here. And so as a result, I limited my analysis to just 500 large companies in the S&P 500. I didn't choose them. I could take sort of an exogenously given index here and look at that particular sample. So I started collecting the data just over a year ago, and then transform that into this paper. So at the same time, this is a large index. It accounts for the vast majority of market cap across the market. So I think it's an important setting in which to look at this. About 29% of companies in this particular index, I found out, receive a SOC 1 or SOC 2 audit. And then if you look at within those companies, I think this is probably as expected, a large portion of them are in industries that are tied to technology or financial services and healthcare. Again, these industries have become sort of saturated with technology. A lot of the banks, Facebook, Amazon, Salesforce, as well as many well-known public hospital chains are getting these audits. The sample includes, a broad swath of industries. JIX is actually a nice thing to use here because they've recently developed a lot of new industries that cater to many of the industries that are relevant here, like processing data and these types of things. And we're dealing, as I mentioned, with mainly large companies. So here's a snapshot of all the companies, which percentage have an associate audit, and some examples of them. So, it's pretty, you can see where they're not prevalent. I mean, they're not prevalent in things like utilities and real estate materials, not as prevalent, but you do see some, like the company Iron Mountain. It's called a real estate firm because honestly, most of their assets are in the real estate business. But they process a lot of sensitive type of data electronically and in physical form. You've got Amazon up here, Expedia, AT&T, companies that you probably would expect to have. Whereas if you look at energy, basically only 3 of the 28 companies there had one of these audits, which is a relatively small proportion compared to some of the other industries. And in terms of when I take questions, it's just at some point if I'm ready, or if you're ready, just let me know and I'm happy to do that whenever. And so maybe I'll give one result first. So the initial hypothesis that I wanted to test is just to show what's going on in these audits, right? I mean, it wouldn't be as interesting, I think, if we looked inside the hood and thought these look just like the procedures performed for a financial audit. But that's actually not what I find. And so I'm able to, again, I take the SOC 2 audit reports and SOC 1 and sometimes, and they come with a lot of detail, again, about what controls are tested in there, what are the outcome of those tests. And I need to describe this more in the paper, but I took basically the controls that I saw like over and over again that appeared 10 times or more in my sample. I called those common controls. And here's some of them. I think the paper has probably too many. It has about 18 in there, I think, in table 1 or 2. But here's some. And so you can see, here's what the audits are doing. Here's what they're actually testing. A lot of this stuff is software oriented, 2-factor authentication, which we probably use at most of our universities. Separate developments for coding. I mean, these are not things that you would typically observe, although sometimes you might, but not things you would typically observe in a financial audit, which is why you need the supplemental audit. And they go on. I mean, like a lot of them are a lot like this. And so the auditor will do a lot of the same procedures in terms of collecting evidence, running tests, doing confirmations if necessary. They're actually quite invasive. So, and I'll get to the cost of the audits, but they actually require a lot of work. They require an audit firm to interface with people who we don't maybe normally interact with in a financial audit. So you're dealing mainly with the engineering teams, a different sort of level of management here than you would otherwise. And so, that's just an example. And if you take the list of internal controls that are tested across the entire sample and you just sort of throw them into a word cloud and you ignore some stop words and stuff like that, I mean, here's the topics that are coming up again and again, right? So a lot of stuff that's customer oriented, revolves around lots of data, and keys and management access, right? And so this kind of gives you a flavor. It's my best attempt to sort of reduce a lot of qualitative data into sort of a one-dimensional or multi-dimensional sort of analysis here, without sort of keeping the paper just really overflowing with this kind of stuff. So in any case, so the scope is unique. I think I would say in terms of what we know in the literature, this to me is quite novel. The next hypothesis is going to look at which companies use these. So again, I have 500 companies, 120 some that have them, 146 I think that have them. The rest do not, and so it provides a unique opportunity to sort of construct a reduced form empirical model of when the audits are prevalent and when they're not. And this approach follows a lot of the audit literature that looks at, for example, in private companies or in other countries, what are the frictions driving an audit? And so I'm effectively just copying the approach that they've taken, which I think is useful here because it's a new kind of audit. to study that. So I construct a model. I'm not going to go into why I include certain variables and not. It's all on the paper a bit. But the key thing here is that I want a proxy for the demand function of both the customer base of a company as well as the managers of the company. And the most obvious way to do that is just to look at the industry, because these are driven a lot by the industry. And so I do that in the following way. I break down by industries, which you're observing right here. I create what's called a exposure to data measure. So I count the number of times a company mentions sort of technology related words or data related words in their annual report, and controlling for industry. This is a huge driver of the prevalence of these audits. But to be honest, and I mean, I'm open to ideas here too, in trying to model the demand function for these audits, my own thing is that you can really capture a lot of this unique variation just by using indicators for various industries. And so you can, I'm surprised, you can model approximately a quarter of the variation in these audits with a relatively simple sort of specification. And that compares quite nicely to prior studies where they looked at the choice to have an audit, for example, in a private company setting. And you can even break down these JIX industries a bit more here and look at particularly which industries are driving these audits. And so these are the sub-JIX industries. And so if you look at companies like a data processing firm, so on, investment banking, I mean, these are huge drivers of the choice to have an audit. And so, again, like investment banking is a setting in which you collect a lot of customer data. You want to keep it secure. Your customers and management are going to recognize this, and you're going to demand an SOC audit or a SOC audit in this particular kind of setting. And so, again, I guess empirically, by including the industry fixed effects all individually here, you're assuming a baseline that takes into account the controls I have in there. And then this is going to be incremental to what the baseline probability is. And so it's not a perfect specification, but it's in line with what people have done in this literature, and I think it's relatively intuitive. So, to conclude from this, you would say, well, the demand is going to arise mainly from companies operating in industries that derive value from collecting and processing lots of data. They're more prevalent in the IT, financials, hospitals, less likely in utilities, consumer staples, and that sort of thing. And then the last thing I do is I look at what is the relationship between the SOC audits and the fees. So it's clear from H2 that not all firms go and get these audits. And so that effectively implies to me that these audits must be costly. And so what I do next then is I construct a model of various audit fees, and sort of model is a function of what we know to drive audit fees, as well as which companies have one of these SOC audits. So in column 1 here, I'm just doing, so this is just like, if you look at just, actually, let's go to column 2 before we go to column 1. So there's a separate category in audit analytics that just looks at assurance services provided that aren't related to the financial audit, which is exactly what these are. And as expected, you observe a large increase in these types of audit fees for companies that have a SOC audit relative to those that don't, controlling for all of or many of the known drivers of audit fees. And to put this into perspective, so you got about a 70% increase in audit related fees per year for companies that have SOC audits. And that translates to about $900,000 for one SOC audit. And that's just on average. There is no association in column 1, and that pertains mainly to the financial statement audit, right? So if these were just complementing or maybe substituting for that particular audit, you may observe association there, but it doesn't seem that these things are that closely linked to those types of audits. These appear to be unique from what the firm is doing elsewhere. To put this into perspective, and I guess I'll just skip down to the bottom few points here. Again, we've got about a $900,000 increase that we're observing here on average for the firms that have the SEC audits. And this is large. I mean, if you look at some of the prior literature, companies pay just over 300 grand for tax services. And this is, we're not comparing exactly apples to apples here, but it's useful for context. And so companies that were exempt from SOX, the cost of that has been has saved companies about 73 grand. And if you put this in the hourly rate, so if you assume an hourly rate of about $300 an hour, this 900 grand translates into about 3,000 additional hours just for a SOC audit alone. And so these are huge. To me, this says, look, this is a huge part of this is a large part of the audit market for many firms. They're costly, they require a lot of hours, and they're just as economically meaningful as many other well-researched settings. So, if you have questions, let's go ahead and
all right. Yeah, let's get into the questions. So yeah, Gian, with the first question. John, I think you're still muted. Well, I can unmute you. Hold on.
So you
start
know,
again. John, you want to start again? You want to start again? You were muted at the beginning. That's all right. I took you off mute. You're all good.
Oh, sorry. Aloha, Jordan. Yeah, I enjoyed the talk. Yeah, I'm sorry, I have not. So I enjoyed the talk. My question is, what's the relationship between internal control audit and SOC audit? Because as you know, all the accelerated filers are required to have internal control audit. Yep. So the internal control, I think there's significant overlap. And my second question is the auditor for SOC auditor the same for the financial and the internal control audit?
Yeah, okay, so so the auditor question, I'll start with the auditor one first. They are allowed, so your financial auditor is allowed to perform a SOC audit. And the reason, as long as they are not operating or helping you design or implement the underlying controls. So if you look at companies like Amazon and Alphabet, I think Ernst & Young performs both their financial audit as well as their SOC audit. So you can do both. To your other point, the overlap with SOX 404, I'm going to try to speak to that by going back to the prior evidence that I showed. If you look at the audits being performed here, well, so one, if you look at the AICPA's particular guidance, they acknowledge that a SOX audit is not going to cover many of the controls that customers may want to see. That's more or less confirmed by the evidence for H1, which shows that many of the audits, or many of the controls tested here, although I don't know for sure, but they're not going to be covered in a typical financial audit. I mean, SOX 404, the objectives look very, very different from what a SOC audit objective looks like. And I talk about that in the last table a bit, but this is a testable idea. And here's how I test it. If you go to column 2 in this particular table, if it were the case that a SOX audit, it already accomplished all of the things that we needed for a SOC audit, then we shouldn't really observe a large increase in the amount of fees paid to an audit firm, because it really wouldn't require a lot of work. It may be immeasurable even, and so you would just call your financial auditor and say, look, can you repackage the results so that you can say that I passed the SOC audit from the SOX audit? I hate those words kind of sound alike, but so short answer is I don't think there's much overlap here. There may be some, and I try to test that empirically and show that empirically that it doesn't seem to be quite large. These appear to be quite unique to the financial audit, which includes the SOX 404 testing section, so that kind of a thing.
I have a question concerning from both the demand side and the supply side. From the demand side, could you give some anecdotal evidence that the customers demand SOC audit? You see, if I'm a customer, maybe I don't care. And from the supply side, because since the auditor can provide both financial statement auditor and the SOC auditor, does it give the financial incentives for the auditor to promote these services to the clients?
Yeah, so it does. I'll go in here reverse order. So it certainly does create a financial incentive or an economic incentive to the audit firm to potentially try to offer this as an additional service. There's no doubt about it. I try to test this empirically. I don't actually include that table in here, unfortunately, but I sort of look at if, like, is there a, so if you look at the, if a company is audited by Ernst & Young, for example, do you observe a sort of a larger prevalence or like an increased prevalence of SOC audits? And I don't find that there are a lot of auditor effects here, which suggests to me that no one auditor is trying to push this upon their clients any more than the other here. But yeah, I mean, it does. It's not a bad thing that they have an economic incentive to do it. They still need to maintain their independence and so on. So to your other point, I mean, it's hard to give anecdotes. What I can tell you is that let's go to the reverse route. Like, so if you're a mining company and all you do is you process or you extract coal and that's it, you shouldn't have there really is no need for a SOC audit. And indeed, that's what I find. You don't find that these companies are getting SOC audits. Customer bases are huge, right? And they include also clients like the government. And so I can give you anecdotes of, like, you know, certain clients saying we want a SOC audit or we don't want a SOC audit. I mean, managers recognize this. They're not unsophisticated. They're very experts in this matter. They're going to usually preempt the customer, in my mind, before the customer says, look, you have to get one or else. And so these are, again, the largest of companies, but your point is well taken.
Yeah. I kind of disagree with your kind of manager's preempting point of view, because I think because this kind of things, as you mentioned, is costly. I think unless the customer demand it, the managers may not be willing to do it here.
Yeah, I mean, and so, you know, I think your point is then to the actual mechanism. I mean, look, managers have a trade-off here. If they don't get one, they know they face the risk of potentially lost sales, lost contracts. I look, my own experience in working on these things, if you want an anecdote, I think, yes, at some point, the demand originates from somewhere, whether it be they know certain clients want or need them, or managers are going to use these as a tool to maybe attract new customers. You know, I'll have to try to think about how I can maybe construct a proxy. I'm limited in what I can do here, John, because I only have 1 year of data. But I think if you look at sort of the times, if we can imagine a time series, that's probably what I would need to try to get at these questions. But they're good. Yeah, appreciate that.
Thank you.
Thanks. Charlie, I think you had a follow-up question.
Yes, thank you. Yeah, piggyback on Jane's question. What's the marginal contribution of SOC audit related research? I read the comparison, author, present in the paper about SOC audit and financial audit. But, internal control audit is also, mandated for all. And it looks like, SOCs also do the same thing, provide assurance service on internal control. Maybe different perspectives, actually. I noticed that one is look at expenses, revenues, and others look at data and securities. Okay, so again, what was the contributions of this kind of research?
Right. Yeah. No, I think that's a valid point. I mean, I think I come from the point of I teach accounting and I used to work in the field and I like the field a lot. And I think we need to, I think we need to maybe perhaps recognize that if you want to understand the broader market for audits, to me, there's reason to be interested in these types of audits. I mean, it's showing a unique development in the labor market for many auditors that they can now go ahead and accomplish these types of audits. They're developing new expertise. And so I have my own speculation about what the role of these audits are going to be 20 years from now. And to be honest, I think they're going to be just as critical as the financial audit, and perhaps more prevalent. But I think this is an issue that should be of importance to the audit field, to the auditors, to accountants in general, sort of because it really emphasizes an important technology in the market, or an important sort of segment of the market, both at the company level and also at the audit level. So, we can always debate contribution and if it's a meaningful one or not. But I think that's kind of where I come at it, and yeah.
Thanks. Actually, Miguel has a sort of a follow-up there. It's
Sure.
Probably a good time to put that in. Miguel?
Hi, Jordan.
Miguel.
I think something that might be interesting to position this paper, because I guess for some people it might look like a narrow topic. And then for some of us, it seems like an interesting extension of long literature. So I think it's good to start from the perspective that a few authors, for example, Robert Neckel, continue to say that non-audit services are beneficial, right? And then a bunch of other people, which I think have been proven mostly wrong, they say that non-audit services are a compromise of independence and etc., right? So here you can say that you find an example of a non-audit service that is clearly beneficial for the client in some way or another. And also the next thing to say is that, to me, the audit-related line has always been very obscure. We know very little about what goes there, right? So we know what goes in tax services, we know that goes in audit fees, but we don't know much about this audit-related fees category, right? So it might be interesting. It's just impossible, right? Impossible to figure out whether there is other audit-related fees versus just the SOC audit. Actually, one time I was looking into this. When you go to the proxy statement, there is a description of what constitutes every line of the fees. And you might be able to go to this audit-related fees line and figure out whether the SOC audit is mentioned there or not.
Right. And so, just for context on that issue, I don't mean to interrupt you, but I do have a couple of examples in the paper where I do find, like, companies like Amazon and I think maybe Alphabet, they explicitly say what their SOC audits cost, and theirs are well into the like $7 million range. But most companies are not going to put this in there. But
yeah, exactly. But in the audit-related fees disclosure in the proxy statement, there is a brief disclosure of what goes in those fees.
Right.
Right. Because these tend to be actually quite large, and what I've seen in other cases is that audit-related fees tend to preclude changes in audit-related fees, result in changes in audit fees. But those are sort of like putting down fires. Right. So this is kind of an annual audit-related fee that it doesn't have an effect on audit fees, but it has positively a good impact on the client's controls, right?
Right, right.
So that's why, sort of maybe to bring this to a broader literature, I think this could also belong into the non-audit services debate. Robert Neckel has several papers on these. I think those are sort of the sites that you can follow through.
Sure. No, that's actually super helpful. No, I really appreciate that.
Yeah, so it gets a little bit out of the sort of just IT audits, and
right,
because that's a very narrow literature, right?
Right. Yep.
But I think it's interesting. I mean,
thanks.
Everybody, we live in a world in which everybody wants to know more about what auditors do. Here you have a paper that shows more of what auditors do. So it's just a matter of demonstrating that that's interesting, I think.
Right. Well, thanks for that. I think is that's a key point. I think trying to relate it back, which is like all you just said, is super helpful for that, and that'll impact the paper's trajectory. So I appreciate that. Yeah. Thanks.
All right. Cool. Thanks. All right. Next up, Fab.
Hey, Jordan. Thanks for the presentation.
Hey,
well setting I just have a comment and I wanted to hear your views on that. You know, I read in this ESG, CSR literature that companies that do this integrated reporting got better data on their supply chain and manage the crisis better. And better data because, you know, to comply with those frameworks, they do what, I don't know if it's exactly an audit or not. And so I was curious whether, you know, aside from this technology setting, do you think in that supply chain ESG, is that a form of audit as well that can be started?
Yep. I mean, I think many, both from a disclosure standpoint and also an audit standpoint, people are now questioning what is a framework, and I don't know what the AICPA is doing in terms of. I mean, it's hard. The thing is, if you go back to the models and CREPs, like it's hard to have a credible audit when there's no credible framework for the audit, when the standards are going to vary across firms, and so my little knowledge suggests that I'd expect there to be a more standardized structure for things like an environmental audit, or like an ESG kind of audit, especially with the Department of Labor recently weighing in on this kind of stuff. But my knowledge is that you've seen the standards for these types of audits evolve over the past 10 years alone. It went from a SAS 70 framework, which until like an SSA 16, SSA 18. We've gotten to the point now where I think they're pretty well structured, but it took a long time. And so I think that's going to happen with a lot of other parts of the company. For context, I mean, you know, if you look around for more evidence on non-financial audit, you have some studies by I think Esther Dufflo and a couple others that look at sort of the role of environmental audits in other countries when you inspect the emissions and these sort of things and how that market works. So we know a little bit about it, but in the US, I think there isn't a lot of structure. There are more standards that many of the large accounting firms will issue particular audits on. If you go look at the, but you know, and those mostly are going to be like international standards, manufacturing standards. If you look at things like Kaizen and quality control, you see audits in there, like, you know, so you just see a little bit, but we don't honestly know much about them. So yeah, no, your point is a good one. I think this is going to, you know, my view is we're going to see more papers like this in sort of other settings. But
cool. Thanks. Next we have Sikwi.
Yes. Hi, Professor. I really enjoyed your presentation today. I like this
Thanks.
paper. It's about non-finance audit. I have a quick question. Because I also know little about the non-financial audit. What is the job responsibility difference between SOC auditors from the audit companies such as Big Four and the IT auditors inside the companies themselves? They also call them like compliance analysts, because when, for example, in the Glassdoor website, for the S&P 500 companies, similar, same to your sample companies, most of them have the predictions about the IT auditors. Some even have senior IT auditors or IT auditor managers, something like that. And I read the paper, the SOC 1 and the SOC 2. SOC 1 pay attention to the technology service part, and the SOC 2 pay attention to the security, compliance, privacy part. And from the job description of the IT auditors or compliance analysts, I found they are quite similar.
Yep.
Maybe because I noticed that 29% of your samples have the SOC reports. The others don't have that, maybe not because they didn't pay attention to that, maybe because they have specific persons to do that. If that is true, I don't know why, like Amazon still do the IT audit, as you said, cost 7 million. I just check out, Amazon also has many predictions about IT auditors. So can you give me some ideas about it? Thank you.
So yeah, sure. I appreciate the question. That's good. It's nice to meet you. So so in brief, I mean, the reason why you can't do it all in house is because you want to have some independence, and that's why I'm sure Amazon has many qualified people in technology. In fact, they're probably way more qualified in technology than the auditor is, but they don't have the ability to issue an independent report on their own systems. And so, while maybe Ernst & Young isn't doing anything sophistically, that's more sophisticated than you're doing at Amazon, they can at least come in and evaluate and provide an independent assessment. So that's the role there. In terms of the role within the accounting firms, most of these are going to fall into like a business risk sort of category. And you may also grab people from the audit staff to do these. It depends on what the level of expertise needed is. So,
Okay.
good points.
Thank you. Thank you.
Sure.
Next up, we got Anthony.
Hey, Jordan. Thank you for the presentation. So I guess for a question, you're talking about how these SOC audits aren't really, in scope of the financial statement audit, at the firm in question, but they're definitely in scope for the financial statement audit of the users of the SOC 1, right?
Yep.
So would it be fair to kind of characterize these as, an efficient reallocation of the user's financial statement audits?
Right. So these are going to, so yes, they're going to be in the scope within there. So these efficient, I don't know exactly what you mean by that, but I think.
Well, so I guess in that sense, when I get a SOC 1, right, I'm allowed to then assess my controls risk is low, assuming the SOC 1, they pass everything. So I don't then have to do that type of controls testing. I can reduce my sample sizes. And so in some sense, I'm punting a portion of my audit to the SOC 1 audit, right? And so if I look at the breadth of all of ADP's customers, in that sense, a portion of all of those audits are now being reallocated to the SOC 1 audit.
Yep. And in fact, the question is, I think, who bears those costs? And I think, well, if you look at ADP's customers, their auditors may want these audits. I mean, it comes down to ADP, given a competitive marketplace, to sort of perform those audits, knowing that if they don't, there'll be a competitor that their customers can go to. But yeah, I mean, it is sort of an interesting way that these audits are linked, right, between the company and its customers' audits. And I think we haven't looked too much into that, but I think that's a different way of course sort of spinning the story, right? But it's a big deal here. I mean, if I could exactly measure which auditors have demanded a SOC audit, that'd be great. So I get at that kind of indirectly with the industry analysis and the data exposure stuff, but yeah, your point is, I think, spot on.
I guess just like taking it, in conjunction with your earlier assertion that, the auditor's expertise kind of lies in evaluating controls, right? Not so much on the technology side.
Yep.
It's just a little disconnect for me there is like how you see that then going beyond the financial reporting setting, right? It just seems like a change in the aggregation of how they're doing the financial reporting.
Well, I mean, I think, if you look at ADP, I think their financial auditors are going to have a different set of expertise than their SOC auditors, for example. I'm not saying they're completely orthogonal to each other, but let's put it this way. They're following a different audit framework entirely. And so they're looking for different objectives. They're looking for different types of controls and performing like a different set of tests. They have a different sense of what material means, I think is the essence of it. And so they're not technology like lackers. I mean, they know enough to be able to test these, just like they know enough about their clients to be able to test their revenue recognition controls. I mean, management is the expert, right? But they have just enough expertise, I think, to sort of evaluate the effectiveness or the design of these types of controls.
Okay. Thank you.
Thank you.
Probably got time for one last question. So Siva.
Thank you. I was not sure whether I was going to make it before the time, but thank you for the opportunity. So the way I was thinking about this is, and I have a paper on CSR and audit, so I was sort of thinking along the same lines. I'm thinking, okay, this is the voluntary. The audit. This audit is voluntary. So if you think at it from the management's point of view, they're saying, okay, all right, why do I want to get this audit done? And there has to be, either something personally for the management, or it has to be value increasing for the firm. Okay, let's say there's nothing personally for the management here. So basically, they decide to have this audit done voluntarily because they perceive that it will be value increasing for the firm. Mm-hmm. If that is the case, then I think an important contribution that a paper like this can make is look at the firm performance, okay, financial performance like ROA, ROE, and also the capital market performance, the returns, after having the appropriate controls, whether it actually increases the firm value or the firm performance relative to the control firms. And one thing I think I would want you to look at is some of the CSR literature, which has sort of gone in this direction over the last 4 or 5 years. There's a lot of voluntary audits of the CSR information, and also there's actually CSR. There's even a framework for how to do these audits. So I think that might help you. Sort of looking at some of that CSR audit literature might also help you.
Okay, thank you for that. I mean, and I'll just quickly, because we're running out of time, I think we're out of time, but to your point on, is this value increasing? I mean, yeah, I mean, that's the ultimate question. I think that's still a lingering question in the financial audit literature, where it's been hard to get at. But I think with some more time series data on this and some more data in general on the, you might observe like a revenue kick from those who get it versus those who don't. You're going to need to do a lot of things empirically to, get that at a causal level. But well taken. I've got it written down. So, yeah.
All
Is that it? Are we done?
Thanks a lot. Yeah, I'm just mindful of the time. So given that, we had a few questions there, but we can give you a printout.
Yeah, I know if you have questions, drop me an email. I don't want to run over time. I think I already have. So I think we're going on for an hour. So again, to all of you, I appreciate you having me here. It's been great. Good comments. Stay healthy. Hope to see you all in person sometime soon. And please reach out if you have any questions. I'm going to hang around here for a little bit too. So
awesome.
So thanks.
Fantastic. And again, from us, thank you. And I think we have Dan Taylor next week. Everyone keep in touch. Jordan, from us too, you will get a list of comments from our PhDs. We do like a little reading group. So I know Yini had a question there that we didn't get to, but you'll get like a little write-up from that. And yeah, if anyone else has questions, please reach out to the author directly. And we look forward to seeing everybody next week. Thank you.
Thank you.